I hope you're doing well and welcome to today's edition of the London Session Open. Today is September 28th, 2018, and my name is Alejandro Zambrano, and it's 9 a.m. in London when I'm recording this. Want to welcome you guys. I can see Maurizio in the chat box today, so good morning to you, sir, and good morning to anybody else that is watching and watching this live or maybe looking at the recorded version. We have David as well. Thank you so much for joining us this morning. Let's kick off. But before we do that, as always, I need to stress that trading financial markets, unfortunately, is high risk. As you've probably seen across all European CFD and Forex brokers, about 79% of traders usually lose money when trading. So it's definitely high risk, not easy to do what we're doing here, but I'm going to try to guide you as much as possible. Okay, let's begin. We'll begin with just a general overview here. You can see euro dollar is slightly lower today, pound dollar as well, dollar yen is unchanged. Aussie dollar slightly upwards, NCD USD unchanged, and the CAD slightly lower. Gold prices unchanged, Brent Crude up a bit, S&P 500 futures and US stock market slightly lower. German DAX is down with 0.63%. So not too big of a movement. German DAX though down a bit, I would say. Now, let's begin here with the euro then. Unfortunately, yesterday was a disappointing day, and the reason for that is that, as you know, the market has been trapped and was trapped for a long time between 115 and then this. You have this big range, but I had reduced it to this, and we had that bullish break here on the 20th, and we had a bit of bullish momentum for a day or two, but you started to see signs here already on the 24th that this was not really going to work out. And then yesterday we got the confirmation, which is the total collapse and the price trading below that September 20th low. Now, going forward here, I think unfortunately we will remain stuck in this range between 115.09 and this new high now, which is this level up here, which is 1817. So I think again we're going to remain sideways here. It's going to be a bit of a difficult market to trade. If you look at something like the 4-hour, then most likely the market will remain bearish, and I'm just giving you some levels. I wouldn't necessarily trade on the back of this, but maybe up here as we start to reach this level, trade is my sell. And I think it'll target where we are right now, which is 1613, and then you have 1569, and then you have these levels down here. So could potentially bounce, say, up to maybe something like that would be 117 or 116.93 or so, and then potentially just go lower again. But it's gonna be a difficult trade, and every time I look to trade and there's something happening in the market, and we know why this happened. The Federal Reserve increased interest rates, which is a natural occasion to see dollar strength. Now, if that is the theme, then I just try to find a good pair to actually trade that idea. And something I did trade, and I'm in the market right now, is gold prices. I'm not saying it has to work out, but we talked about it. We talked about it for a long time, and the market was trading sideways like this. And it's a relatively mature pattern. So we first hit the high here on the 28th, and yesterday on the 27th we had a breakout. So it's a pattern that was almost 1 month old, and a pattern that is about 2 months or even 1 month is much better than a pattern that's been in place for a few days. Like a baby, really, when they're very small. I mean, their head is bendable, really. Not bendable, of course, but their skull is not really properly fixed. Their little legs and everything are a bit soft. It's the same situation here. Like in shorter term, smaller patterns, you won't have the resilience that you'll see in support and resistance. And that's why most short-term patterns fail. And that's why it's so hard to trade, because breakouts in the short-term patterns, short-term time frames are really, really difficult to trade because people don't really trust them. And again, it's a little bit like a baby, a little bit soft. Things are growing and things can break easily. So here I like this. And hopefully this is going to be a better opportunity. All I can say so far is that we took out the low and I'm in a bit of a profit. And I'm going to remain bearish as long as trade below 11.98. And the market moved a little bit lower today. And this is a good sign. Hopefully it just continues to go down lower. And even if it does, I think if it swings up to the September 11th low, I think traders are going to sell, and if they don't sell here, they're going to sell slightly higher up. You see this low here, the section here, and again, as long as trade below yesterday's high, I think we should be fine. But I personally think if it goes up, it's probably going to go down, and then it's going to allow me to lower my stop loss from the high to the actual breakout level. But the way this looks right, I think that could happen maybe tomorrow, or sorry, on Monday or Tuesday. There's other pair as well that you can keep a close eye on. So this is the dollar yen. You might remember we talked about dollar yen taking out this high, and we turned bullish already here on the 13th of September. It took a few days before the market rallied to the upside, but it finally did. Stock markets in general doing quite good, not today necessarily, but in general. So we had that break to the upside. Again, the dollar is doing quite well. And here, when we took out this high, which was the July high, it opens up for a further push up to 118. I don't really, I'm not trading this, but I suspect this could be potentially a little bit of a possibility to be long. If you look here on this daily candle, yesterday was a solid daily candle. So really, as long as you trade above that low, which is at 112.55, then if we go down, I think traders will try to buy, and then they try to lift price up to 114. Something I didn't mention in regards to gold, I think we could potentially touch the August 15th low. As I talked about in the past, this is a rectangle pattern. Some people think it's differently, but I'm treating this as some sort of a rectangle. And the difference between the lower level and the higher level, that's $26.50. And a break to the lower level, you subtract $26.50, and that gives you the August 15th low. So here, from a risk-reward ratio perspective, it's also a good setup. In essence, you risk 1% to potentially make 2.23. So that's more than 2 times the risk, which is a good setup. Crude oil, this is Brent Crude, and actually let's talk about US oil, because that's usually what we cover here. So in US oil, and this is a mix, I mean, this is a spot price to some extent. It's a CFD, well, this is a future, a CFD of the futures contract. This is what it is. And we talked about it for a very long time. You know, I said the crude oil is a boring market, but when we take out this level up here, I said we'll probably head to the upside, have this big triangle that the market breached, and that provides this target. And then you have inverse head and shoulders, head, left, right shoulder, and the break to that happen here as well, here. So we have these two long-term targets here. So risk-reward ratio here is very, very good. If we just reach the high, potentially make 4.5%. If we touch this level, that's 10%, 9% for a initial risk, or maybe 1%. And the market has moved to our advantage since then. Hasn't necessarily moved too far to our advantage, but the idea was to buy here on the breakout around 71.39, and then stop loss preferably down here initially. And now this could be reduced, as I talked about yesterday, all the way to the breakout level. Why? Because the market moved all the way up and then tested the breakout level and then moved upwards. So this could now be placed here. And then we had another test to this level, and that as well failed. So this is actually looking encouraging, and I think Hopefully, what you want to see in the next few days is you want to see a break to the upside. I think when we take this out, you're probably going to head upwards. And then one can make a decision. I mean, hitting a target 10% away, it's not going to go in one go. Sometimes it does. So one could either track with stop loss orders all the way up to the high. Alternatively, one just tries to maybe book 0.5% of the profit at the yearly high. That will still be a good residual ratio trade on that. Or just book the whole position here and then see what happens afterwards. So this is looking very good. Again, look at that. You see the breakout and goes to our advantage, and then it goes down, then it goes upwards. This stop loss is pretty much at break even if you traded this, and that's exactly what I'm hoping I'll be able to do with gold in the next few days. In regards to stock markets, we had a very nice push yesterday. The market, this is a daily candle, the market was close to 2,927. And if we would have closed here, it would have been a very good idea to maybe buy a dip. And we talked about this before as well. This being the trend defining level at 2,901, and we're still above that level, so maybe it's gonna be okay to buy here. I mean, according just to this 4-hour chart, it's definitely okay to buy. You had that very strong move here, and I think, you know, only if we take this out. Sorry, this looks good. I think potentially is gonna bottom out here. And I just want to remain bullish about 2901. Alternatively, one waits for this breakout to the upside. In regards to the German DAX, German DAX is slightly lower today. We already knew that this whole area is going to be a troublesome area, and really what we're looking for is a break to this high, which is 12,600. Until we take that level out, I think it's going to be a bit of a choppy market. There's other stuff to trade. As for example, this is the Nasdaq over the last, I think, almost a month now, since the 10th of September. I've been saying that people are probably going to buy here. That's working out fairly good. Nasdaq is almost at its all-time high. This is a good little spot to book profits, but if we would revisit the lows, I think traders are going to buy. So if you want to buy stocks, this is probably what you want to be focusing on. Nasdaq, S&P, maybe even the Dow Jones, but not the DAX. And if you're looking to sell dollars or buy dollars, again, dollar yen, interesting. Gold, interesting. All the other stuff here is actually quite choppy, and I personally don't think it's worthwhile trading. Okay, I see here as well that Hi just joined, so I want to thank you so much for joining this morning. All right, doesn't look like we have any questions, so I'm gonna wrap things up. Guys, have a good weekend. Thanks so much for joining, and don't forget to like the video, and thank you so much for your continued support. Have a good weekend. Thanks.